Welcome back to Core Conversations with me, Katie from Apple. Today we've got Karen Diaz. Karen is a mortgage loan officer extraordinaire and actually has worked for Apple for about a dozen years. Where did you start with us, Karen?
So I started as a teller at the Manassas branch, and then I went into doing car loans in our consumer lending department. So that's where I got my loan experience from. So that's where I learned debt to income, loan to value. And then I did credit card operations for about a year. And that's when I went into mortgages.
Yeah, you've worked almost across the board for us.
I plan to own the company one day.
One day, Karen's, you heard it first, folks. One day, Karen's going to own the company.
No.
So you're in mortgages now. Obviously, a huge moment in somebody's life when they're ready to get a mortgage. I hear, because I live next door to one of your colleagues, a mortgage loan officer, that if anybody's having a problem in the mortgage department, it's call Karen. So we know that we've got the expert here with us today. And mortgages are something that, it's something that people are going to do once, maybe twice in their life. This is not something that happens frequently. It's stressful. There's laws. It's a lot of money. So what are the initial questions or concerns that the people come to you with?
So when they're buying a house, it's always like, where do I start? So that's sometimes, it's just asking the right questions because it just depends on everyone's scenario. So I always start off with, okay, so what are you paying right now? What do you want to pay, right?
Yeah, so this is a good point. I will disclose that I have only one mortgage ever in my life. And when I went initially to get approved for that, my question to my loan officer was, how much can I afford? And she, of course, came back with exactly what you're saying, because she's a good loan officer, which was, well, how much do you want to pay per month? What does your budget look like?
Exactly.
Rather than what can we possibly get you approved for? So that's a good place to start.
Yeah, because sometimes, maybe you think you want a $2,000 mortgage, but then maybe that doesn't get you what you're looking at, or maybe your payment is lower than what the house that you're looking at is going to have a lower monthly payment than what you thought. So it really just depends. But then also we have to think about those other expenses, right? You have to think about, do you have a car loan, your student loans? There's also, then we have to talk about the closing costs and your down payment.
Yeah, so now I'm starting to get hives. So before we dive into all that, if you could catch somebody before they're really ready for a mortgage to say, hey, Katie, you're thinking that you might one day get a mortgage. We're 6 months out, a year out, 2 years out. What are some things that you would really recommend that person do to prepare to be in the best position?
Not have many debts. So, have your credit cards paid off or just low balances. People need a car. So if you have a car loan, that's okay. But if you're just starting off, think about that payment and think about that plus a mortgage. Is that going to be okay in the future? And then save up some money. I always say save up some money. Like, there are low down payment options, but you want to have some savings because there's different reasons for it. But even, let's just say, you can get everything covered. How about if something breaks down that first month or 2 months that you're in the home, right?
Yeah, if
you don't have a landlord to call,
there's somebody
you don't
who
have
does that for
the
you,
management company to call. So you're going to want to fix that. So I always say save up some money, at least 3 months of monthly payments of what that mortgage payment is going to be. And, we'll go from there as well. Just maybe like a year ahead of time, consult with a loan officer on what do I need to do to be ready.
So that you can prepare. So having about a year is a good spot to
for a
be
first-time buyer, I would say.
Okay. Now, you didn't mention just then credit score. How important is my credit score when I'm applying for a mortgage?
Really important, because you want to have good credit so that you get the best possible options. I do show the difference of, like, well, look, this is what your credit score is. and this is what you have to bring to closing. This is what your monthly payment will be. But if for this same amount, if you had your credit score in the 720s, this is what it would be, and it's a pretty big difference when we're talking thousands of dollars.
So paying attention to your credit score is going to be a part of that process if you don't want to be slapped with a bunch of closing costs.
For sure.
Okay, so a mortgage is the loan amount that I'm paying the financer for my home, but when I get a mortgage, it's not like a car loan, which I just go out and get. I have to pay closing costs for a mortgage and potentially other fees. What is that about?
So there's fees, the origination fees, that's what the bank is charging you, what the lender's charging you. There's also the appraisal, the credit report, all of those are fees. The title, so title searches, they want to make sure, the title company needs to do a search against the property, make sure that there's no liens on the home, just make sure everything.
Yeah, you don't want anybody else claiming that they own the house.
Exactly. And then the state and county, they'll also charge to record that deed transfer. You also have to pay your homeowner's insurance upfront. So just like for a car, you have car insurance, you have property taxes, but that you take care of yourself, right? For a mortgage, the lender wants to make sure that it's taken care of, so you have to pay it up front, and then we send off those payments for you.
So when you use the word closing costs, are you kind of wrapping most of those things in? And what should somebody expect to pay? Can you kind of guesstimate that, or is it different for every mortgage?
It's going to be different. It's going to be different depending on the loan amount and the down payment. We do have a really cool tool on our website, on our mortgage center, and you can plug in sales price, 500, loan amount 450, put in a credit score range, and it's pretty on point. There's other things where we'll try and save you some money, but at least doing that, you'll see, oh, well, that's going to be my closing cost.
It'll give you an idea.
Yeah, it'll give you a pretty good idea.
Okay, so understanding what your monthly payment should look like based on your own personal budget, having at least 3 months or so saved up worth of those monthly payments just to help with closing costs or in case something goes wrong once you move in. Wah, wah. But there's also different types of mortgages, right? There's different 30-year fixed or an ARM, or can you tell us a little bit about what those are?
So we have 2 major products that our first-time home buyers usually ask for, right? So there's the zero down, so there's still closing costs. So there's down payment and closing costs. So the zero down, there's no down payment, but there's still your closing costs, so we would go over what that looks like.
And those get lumped into the total amount? No, the closing costs have to be paid up front.
Those have to be paid up front.
Okay.
The thing with that product is that it gets your foot in the door, right? So it is not a fixed rate though. So it's an adjustable rate mortgage. But it's not as scary as people think. Like I think a lot of people get really scared about adjustable rate. People panic. But my first house, my second house now, that's what I've done both times. And so for the first time, I didn't have that much money saved up. And my husband at that time, my boyfriend, and we wanted to buy our townhouse. So monthly payment wise, we were fine, but like our savings was, just enough. And the way that it works is you look at your monthly payment, what we could afford at that time, and it worked out for us. But after 5 years, that's how the adjustable rate works. So it's a 5-5 ARM. Every 5 years, the rate could change. But I mean, as a first-time buyer, anybody that has a home, like usually you're not in that first home for more than 5-7 years. I think 5-7 years is like the average that you'll see. So you're pretty much just tell yourself, okay, what's this monthly payment going to be? We show you worst case scenario, year 6, your monthly payment might go up to this, but you will want to refinance it into a fixed rate before that.
So let's talk about refinancing.
Yeah.
How do you know when the right time to refinance? I guess it's pretty clear with an ARM. You should probably be looking around year 5 to potentially refinance.
Yes, but that's what you need to come to the loan officer for. The loan officer looks at your numbers. You come to us, we'll look at it, okay, how much did you buy your house for? What's the value? What do you owe today? This is what it would look like to refinance. Sometimes it doesn't make sense. Sometimes maybe the rates have gone up. Maybe you still need to pay it down a little bit more. So it doesn't hurt to check in after a year, 2 years. You don't have to refinance just because you're asking about it, right? You just have to do it at the right time. If it doesn't look right, if it doesn't feel right. And also the loan officer will be honest. Like I've told plenty of people, it doesn't make sense for you to do this right now. And then, there is those cases where people have done zero down, and honestly, within 3-4 years, they're calling me saying, I'm ready to buy my next house. So they didn't even have to worry about refinancing.
Yep.
Because when you're refinancing, you're adding closing costs again into your loan. But then if you're going to sell it next year as a seller, you have closing costs also.
Yeah, so it doesn't make any sense to do that.
You've just thrown money away.
So it sounds like if you have gotten a mortgage, the things to be aware of is what's the interest rate you're paying now? Will that interest rate change? And having a good sense of what kind of equity is in the home as you're paying that mortgage down are good guides for when to contact the professional to take a look at the situation say, okay, it's time to do this or it's not.
Yeah, and we go over that. I know that we do a good job at explaining that. I like to break it down. I'm all about showing you the quotes, showing you the options, and breaking those two options down as a first-time buyer. Do I want to do the zero down adjustable rate, or do I want to do the 3% down fixed rate? And then also, when they're ready, when you're ready to refinance, breaking it down as, okay, well, this is what happens if you refinance today, and is it worth it or not?
Yeah. So, what are other special? I mean, obviously, if somebody comes to you or anybody at Apple, they're getting great service, but what are other special incentives or things that Apple has if somebody's looking at getting a mortgage?
So many. So we can help you get a grant for being a first-time buyer, but then also there is a community partners grant. So if they're a teacher, like an educator, first responder, there is a grant if it's still available, because it's on a what do you call it? First come, first serve basis. But if the grant is there and you qualify, we'll submit that application for you once you're under contract. So we can never guarantee it up front, but that could be anywhere from $7,500 to $10,000.
Oh my gosh, that's amazing.
So yes, I say save up money. I'm not saying save up the whole thing, but save up some so that you have something to play with versus not having anything and just having to rely on this possible grant that we might not, it just depends. We'll always try to save you as much money as possible. So there's the grant. We have our Home Advantage agents, right? So we're partnered with Home Advantage, which is a list of realtors in the area. And then we have relationships with these realtors. I know I have my top 3 that I can name. That's my go-to realtor in that program, and the buyer is automatically guaranteed a rebate from that realtor.
Oh,
so there's
great.
the grant, there's the rebate. To me, it's all about the customer service, right? So if you have a question about your mortgage, how long are you going to sit on the phone with any other lender that you can't just walk in and ask, right? You can go there. There's accountability. I think that's a huge benefit is to be able to go to somebody and ask those questions and have that answer,
So if I'm thinking about getting a mortgage, what are the steps I should take?
I would say first, get pre-approved if you want to buy. And then if you're looking to refinance, then, submit that application. But if you want to talk to somebody, then reach out to one of the loan officers to your branch. So there's 7 of us now, and we each are assigned a branch. And, just ask your local branch which loan officer can I call or can call me and we'll reach out.
Awesome. Karen, it's been a delight. I feel like mortgages aren't that scary anymore. Thanks for coming out today. Thanks so much for watching. Don't forget to like and subscribe to our channel for more of what Apple's up to in the community and personal finance tips and tricks.